It would seem that the Bank of Japan didn't view any of their traditional easing measures. Buying additional bonds or cutting rates is likely to have a positive effect. Charlotte Harington, Fidelity International. The US Federal Reserve interest rate decision was left unchanged. Why do you think they left it on hold, and when do you think they will change it?
Well, the Fed were really very much expected to stay on hold at this meeting. They've been talking for a while now about global weakness, in particular from the emerging markets, as well as risks to their inflation objective from inflation expectations, as well as that in the June meeting they added extra risks from the potential of a fallout from the Brexit vote, and also we had quite a weak US employment report in May. Now since then we've seen little contagion from Brexit, and the US data has really continued to improve, with US unemployment resuming its downtrend. Now this was somewhat noted in their meeting in July, in which they said near-term risks to the economic outlook have diminished. So we've got 3 meetings left this year, September, November and December, and the data is really going to be the most important thing for the Fed, and they're likely to err towards December, as that's going to give them more time to assess the incoming data and to make sure that there's really no fallout from the Brexit vote. The other thing that they may also be considering is the US election in November, so this is likely to see them next move around December.
The UK GDP growth rate picked up by 0.6%. What do you think contributed to this surprising rise?
We had a mild positive from the manufacturing sector over the quarter. However, this data didn't include the period around the Brexit vote. So in that respect, it's really quite backward-looking. To look at more forward-looking indicators such as business confidence, consumer confidence, and also UK housing data, which tends to be quite a good lead on GDP, we really would think that the risk to UK GDP growth from here is to the downside.
The Japanese yen went up 2% against the dollar after the Bank of Japan left their interest rates on hold. Why do you think they came to this decision after the 2-day meeting?
Well, the Bank of Japan moved to negative rates earlier in the year, and it really had very unintended consequences. And it would seem that the Bank of Japan didn't view any of their traditional easing measures, so buying additional bonds or cutting rates, as likely to have a positive impact this meeting. And because of that, they've remained on hold with their interest rate, but they did increase ETF purchases, but overall it's really been below market expectations. Now the case for easing in Japan is very clear. Prices are falling at the same rate as they were when they began QQE in 2013, and today's inflation release, which is consumer price inflation ex fresh food costs, the Bank of Japan's official target measure, fell to negative 0.5% year over year. But the Bank of Japan have left the door open to more policy action in September, when they've said they will do a bigger review of policy. And so that does leave markets with some hope that we could get something potentially more unconventional or seemingly more coordinated with fiscal policy.
Thank you very much for speaking with me today, Charlotte. Well, that wraps up this week's business news. Be sure to tune in next week for a whole new lineup of broadcasts. Goodbye for now.